We'll go ahead and call to order the fourth meeting of the House Standing Committee on Banking and Insurance. Do we have any committee members who have? I don't think we have any guests in the audience at this time, but if so, let us know. Madam Clerk, if you would, please call the roll.
Representative Bentley.
Here in the room.
Representative Fisher.
Here in the room.
Representative Flannery.
Present, Annex Office.
Thank you. Representative Frazier Gordon.
Present in the room.
Representative Gooch.
President in the room.
Representative Hatton.
Present in the room.
Representative Kirk McCormick.
Present in the room.
Representative Koenig.
Present in the room.
Representative Kulkarni. Representative Lockett.
Here in the room.
Representative McPherson.
Here in the room.
Representative Meredith. Representative Pollock.
Here in the room.
Representative Roberts.
Here in the room.
Representative Santoro.
Here.
Representative Smith.
Present.
Representative Stevenson. Representative Upchurch.
Here in the room.
Representative Westrom. Vice Chair Lewis.
Present in the room.
Chairman Rowland.
Present. We have a quorum. Actually, we have a full house this morning, so I appreciate everyone's attendance. We do have two bills up for consideration this morning. We'll go in the order that they're on the agenda. So the first bill will be House Bill 643. That is being presented by Representative McPherson. Representative, when you're ready, introduce yourself, your guest, and you may proceed.
Yes, thank you, Chairman. My name is Sean McPherson. Representative McPherson, I represent the 22nd House District. I'll let my guest represent himself.
Good morning. My name is Charles Weiss. I'm the Commissioner for the Department of Financial Institutions in Kentucky.
And my name is Justin Burris. I'm the Deputy Commissioner.
So thank you all, committee, for listening to our bill. This bill, I'll put it in layman's terms to you. This bill basically does two things. It expands the locations in which mortgage companies can do business, and it changes the fee structure. It really changes it from a ongoing process through the year to a one fee at the beginning of the year. So I'll entertain any questions.
Commissioner, I know you've spent a lot of time working on this and discussing this with myself and Representative McPherson. Would you like to add anything to the discussion this morning?
Sure. First of all, I want to thank you so much for allowing me to testify remotely today. I'm actually in Washington, D.C. If you hear any background noise, I apologize. Apparently, I picked the only hotel in D.C. that's going through a remodel, so there's a lot of noise right now in my room. But I do want to thank Chair Rowland and the members of the BNI for considering House Bill 643, which is an act relating to the mortgage industry. I also want to thank Representative McPherson for sponsoring this bill. The DFI has negotiated the changes that are in House Bill 643 with the mortgage industry over the past several months, and we have achieved broad consensus regarding the changes in the statute. 643 does accomplish several things, like Representative McPherson just said. It does provide the industry with flexibility to oversee the mortgage lending process while allowing mortgage loan officers to operate using technology to connect to consumers, our customers. Bill also provides some clarity regarding how employees can be compensated. And finally, as Representative McPherson said, it updates the fee structure to provide the department with and the non-depository division with a sustainable revenue stream. I'll briefly touch on each of these topics, and at the end, I'll be glad to take any questions that you may have. Current statute regarding the flexibility in the mortgage lending process. The current statute requires the mortgage lending process to only occur at a licensed location, which can either be a principal office or a licensed branch. As we've all experienced the past 2 years, this is not how businesses operate in today's high-tech world. House Bill 643 provides the flexibility for mortgage companies and mortgage brokers to permit mortgage loan officers to work at alternate work locations while at the same time maintaining acceptable controls over books and records and customer information. This flexibility is also needed to allow mortgage loan officers to conduct in-person meetings at locations convenient to the borrower. This simply aligns the statute to the way the mortgage loan companies and mortgage loan brokers operate today. Regarding compensation, the current statute provides conflicting standards regarding how mortgage loan officers can be compensated. The U.S. Department of Housing and Urban Development leaves the decision up to IRS guidance regarding mortgage loan officer compensation alternatives. The proposed bill provides clarity that the DFI will not determine how mortgage loan companies and brokers compensate mortgage loan officers, and instead the licensed companies should follow IRS guidance regarding compensation. And finally, the biggest part of the bill, it changes the fee structure. The current fees in the mortgage statute were established in 1998 and were last adjusted in 2003 when the fee for late registration was increased from $100 to $250. House Bill 643 transitions the mortgage statute from a renewal system that is based on a per office location to a renewal system that is based on an assessment, which is based on the volume of loans originated or serviced in Kentucky. A significant portion of the DFI non-depository revenue is generated from charging licensees for every examination conducted. This could result in large fee bills sent to a licensee at the conclusion of the examination. The proposed structure in 643 would eliminate the DFI charging for examinations. Currently, the examination fee is based on a per hour charge for employee time spent, all travel costs, including mileage and airfare, all hotel expenses, and all per diem costs incurred by the examiner while conducting examination. Under 643, the DFI will no longer charge a licensee for an examination. Instead, it will be included in the assessment at the end of the year. Furthermore, under the current fee structure that exists today, the largest amount of revenue is generated from the smaller mortgage companies. Based on the application of the current statute, smaller companies generate only 18% of the loan volume in Kentucky. However, they pay 64% of the total fees. Conversely, large companies generate 82% of the loan volume and only pay 36% of the total fees. The new fee structure would have the largest mortgage companies pay the largest portion of fees. And a breakdown of how the recommended fee structure would be is that the new fee structure would set the licensee renewal fee based on the volume of loans originated or serviced in Kentucky. A factor of 0.0125% is applied to the company's loan volume. The minimum fee would be set at $1,500 and the maximum fee would be set at $15,000.
Commissioner, not to interrupt you, but we do have a motion and a second on the bill. And,
Great.
We do have one question so far.
Sure.
Representative Lockett.
Thank you, Mr. Chairman. My question comes from, as I'm looking over this, and maybe you can just help me understand kind of the fee structure as you were talking about there. A couple of questions regarding that. First of all, I'm looking at page 8. This is line 8 line 8 through line 10, where it says writing a check payable to the Kentucky State Treasurer for $5,000. Can you tell me what that is currently?
Currently, if I'm not mistaken, that references the application fee for a new company coming into Kentucky. The current fee, I believe, for a licensed location or for a new license application, again, would be dependent upon the number of locations the company presents. So I think it's set at $350 for the main office and $250 for each branch. So that fee is hard to determine based on, because we don't know what would be in the application. And the current, what we're recommending is $5,000 would be, that's a flat fee that's not dependent upon the number of locations the proposed entity would have, but instead would just be a flat fee for us processing the application.
Just a follow up as well. So that page 9 as well, and as you were talking about in detailing the fees associated with this, it seems to me, and you can correct me if I'm wrong, it seems to me that this overall bill increases fees that could potentially be passed down to consumers and lenders. Is that correct?
There is no direct correlation between what the fees that a company would pay the department and a fee that's charged to a consumer. Obviously, the overhead costs associated with the company's operation would have to be factored in and what fees are charged to the customer, but there's no direct correlation. But you are right. It would go into the overall overhead cost of the company that would be factored in with the fees they charge.
Thank you.
Representative Hatton, you have a question or comment?
Yes, please, a question. Mr. Vice, if I understood that explanation correctly, currently, if a mortgage lender were to have only one location, they'd have about a $350 fee. And this would make the fee for everyone a $5,000 fee. So is that meant to discourage smaller businesses from making this application? Or if that's not the intention, do you think it might have that effect?
Well, you are correct. If someone was to apply for an application with the department, they have one location of principal office. There would be an investigation fee in addition to the $350 location fee. So it'd be a little bit higher than just $350, and that would be a one-time fee to apply for a license. From that point forward, they would be responsible for the renewal fee at the end of the year. This is not meant in any way to discourage applications. It is instead an attempt to establish a set fee, a flat fee, and the fee would not be dependent upon how the business plans to operate or how many locations they have. Instead, it's meant to cover the cost of the department for the investigation, the background information that we must obtain, and the employee time that's used into processing the application. But that $5,000 would be a one-time fee for a brand new applicant.
Follow up, if I may, Mr. Chair. So do we know how much this might net the state, or whether it's an increase or about the same or less? What'll turn out if everyone's paying the same $5,000 fee rather than the varying fees?
That's extremely difficult to estimate, but we've got some kind of a little bit of estimation that it will increase the revenue stream that we generate. But one of the reasons it makes it difficult is we don't know how businesses will structure themselves in the future and how many locations they will have. And this is one of the things that we're trying to do to offset with the creation of a system that allows an alternative work location. We could see a potential for a significant reduction in the number of licensed branches in Kentucky. But our look at this is, and another factor here that I didn't get to in my comments would be on the examination fee. That represents a significant portion of our revenue right now. And one of the things we're trying to do is not make our revenue stream dependent upon us performing an examination. Instead, we're trying to generate a revenue stream that would cover our cost to oversee the industry, to regulate the industry. And even though you're looking at a renewal fee of $350 potential minimum, not factored in that potential minimum fee would be if we do an examination of that company during the year and we send a fee bill out for it. So the examination bills would be eliminated. We wouldn't be charging for those anymore. And that would give the department the ability to conduct examinations on a risk-focused basis and not provide an incentive for us to do an examination because of revenue needs.
Thank you, Commissioner. And one reason we haven't heard this bill earlier is that Representative McPherson and I had some of the same concerns that have been raised here this morning. So we've been talking with the commissioner and with the mortgage industry about this, and the mortgage industry is supportive of this bill. Just to point out, the $5,000 is an application fee for new applicants. There is an increase on the renewal fee, but as the commissioner pointed out, they're doing away with the examination fees. Currently, I think the department charges $42 an hour, plus travel, plus expenses. These examinations last multiple days and run into thousands of dollars. The mortgage industry feels that if they front load the renewal fee and pay less on the back end, that a lot of the smaller operators are actually going to pay less. The large mortgage brokers in the state are probably going to pay more, which they are okay with. So those are the conversations that we've had over the past couple of weeks trying to get the bill ready for committee this morning. So I think Representative Lockett has a follow-up question.
Sure. Yes, thank you, Mr. Chairman. My follow-up is basically, would you consider this bill, as I understand it, it seems like this is a revenue bill for the department. Would you consider this to be a revenue neutral or a revenue increase for the department?
I would consider this as yes, it will potentially increase the revenue for the department. um, um, for a couple reasons. Number one, obviously, like I said earlier in my testimony, the fee hasn't been altered since 1998. So from an operation of the department's perspective, it's almost impossible to offset the cost that we have in today's environment based on a 1998 fee structure. Second thing is one of the things that we can't fully estimate right now, even though we've looked at this and tried to make sure we've covered this cost, is the examination portion of it, which right now represents close to half of the revenue that the department receives from this industry. So again, we're eliminating that potential revenue stream and replacing it with a fee structure that's based on the volume of business that the company does in Kentucky only. And, you know, one of the other factors that could play into a company, the mortgage industry does have some seasonality and cyclicality to it. As the mortgage company's business decreases, so would the renewal fee that they pay the department would decrease as well. And as the industry picks up and has periods of good times, like we've experienced over the past 2 years, obviously that fee would increase, but it's capped.
Any further questions for the commissioner or the sponsor? Commissioner, we do appreciate all your work on this bill and over the past couple of weeks kind of taking care of some of the concerns that Representative McPherson and myself, Representative Meredith had on this. And like I said, the mortgage industry is supportive of this, especially the smaller operators. They feel like this will actually be better for them than the current structure where they're paying more for the examinations. Seeing no further questions, Madam Clerk, please call the roll.
Representative Bentley?
Yes.
Representative Fisher?
Yes.
Representative Flannery?
Yes.
Thank you. Representative Fraser Gordon? Yes. Representative Gooch?
Yes.
Representative Hatton?
Yes.
Representative Kirk McCormick?
Yes.
Representative Koenig? Representative Cole Carney?
Yes.
Thank you. Representative Lewis?
Yes.
Representative Lockett?
Yes.
Representative McPherson?
Yes.
Representative Meredith? Representative Pollock?
Yes.
Representative Roberts?
Yes.
Representative Santoro?
Yes.
Representative Smith? Representative Stevenson? Representative Upchurch?
Yes.
Representative Westrom? Chairman Rowland?
Yes, and the bill does pass favorably. Congratulations, Representative McPherson. Thank you, Commissioner, Deputy Commissioner, for being here with us.
Thank you, Chairman, and thank you.
Thank you very much. Appreciate it.
Up next, we have our first Senate bill of the session. Representative Wise will be here, or Senator Wise will be here presenting Senate Bill 140. Sorry to demote you there, my friend.
That's actually probably a promotion.
My senator, my new senator. When you're ready, introduce yourself and anyone that you have on Zoom or with you in the room, and you may.
Mr. Chairman, members of the committee, thank you. Max Wise, Senator 16th Senate District. And Mr. Chairman, the first time I've appeared in front of your committee, and it'll probably be the last time, but I do want to say, as you soon leave the legislature, I want to thank you for your years of service in the General Assembly and your leadership on this committee. So before I exit, I just wanted to get those words out before that. I do have a visitor that's on Zoom. If he would please identify himself for the record, please.
Brian Henderson with the Coalition of State Rheumatology Organizations and Kentuckians for Step Therapy Reform Coalition.
Mr. Chair, members of the committee, Senate Bill 140 relates to step therapy reform. You're probably asking yourself, what is step therapy? Step therapy is also known as fail first. It's a practice that requires patients to try and fail one or more medications chosen by their health insurer or their PBM, their pharmacy benefit manager, before they can access the treatment prescribed by their health care provider. The bill has been worked through many different shareholders throughout this entire process across the healthcare system. This also legislation is supported by a robust coalition representing Kentucky patients, healthcare providers, and I want to thank all those shareholders who helped me along the way with this bill. Senate Bill 140 is actually a continuation of work that the legislature did in 2012, when Kentucky was one of the first states to enact legislation to reform the practice of step therapy. And since then, more than 24 states have passed comprehensive step therapy reforms, And one current step therapy law is a great first step, and Senate Bill 140 will bring the important updates needed to ensure the use of step therapy continues to work for patients. Thank you.
Senator Wise, we have a motion and a second. Would you like to take questions at this time?
I will take any questions, but if there's a motion, I'm always happy to let that motion stand.
Do we have any questions or comments from the committee members? Representative Bentley has a question.
Thank you, Mr. Chairman. Senator, is this on all disease states or a closed number of disease states?
I'm going to let my guest that's online, if that's okay, Representative Bentley, answer that question.
It is agnostic on the question of disease states, so it would be inclusive of all disease states. That's correct.
I couldn't hear it. Could you repeat it, please?
Yes, it is. It does not specify that the protections are limited to any one disease state, so it would be inclusive of all types of disease states.
So do you have a list of those?
I don't have any particular list, but it would include all of them. The protections that are provided by the bill allow a prescriber in concert with their patient to override a step therapy protocol under certain circumstances. So the limitation there is whether there's a clinical justification contained in the bill. But some of the conditions that would be affected would be things like rheumatoid arthritis, lupus, other complex autoimmune conditions. This bill would include protections for cancer patients, for example, folks with complex allergy and asthma conditions, psoriasis, psoriatic arthritis, epilepsy. Those are just kind of a few of the conditions for patients for which this piece of legislation would markedly improve their care, just as sort of an illustration.
So it'd be like for lupus, right?
Yes, yeah, that would be a good example.
Okay. Yeah. Is COVID included in your step therapy?
I'm sorry, could you repeat the question?
Is COVID
No. It would depend. So it's not specifically included or excluded. If there were a COVID medication that were subject to a step therapy protocol, so say an insurance company said, before taking this particular COVID medication, you have to take sort of this COVID medication before we're going to pay for the other service. That would be something that would be impacted by the bill, provided that it's a prescription drug therapy. And that particular prescription drug therapy happened to meet one of the outlined circumstances in the bill, that, the drug that the plan is requiring may be contraindicated. So pursuant to the prescribing information for the drug, it's not something they want you to take in concert with, say, another medication, or alternatively, it's something that may negatively impact like a comorbid condition, for example, or any of the other scenarios that are listed in the bill. I hope that helps answer the question.
Do you use CDC morbidity rates when you do this?
I wouldn't say we use morbidity rates for anything in the bill. I presume that morbidity rates factor into things like the way that they sort of produce prescribing information, those sorts of things, or sort of kind of what is the best medical practice for, treating a certain condition.
Thank you. Thank you, Senator. Thank you, Chairman.
Thank you. We have a question or comment from Representative Kirk McCormick.
I just going to ask for some clarification. On this bill, is that limiting? Let me just ask this in layman's terms. If your doctor prescribes a medication to treat a medical impairment, does this bill limit the pay? Or is this bill saying that you have to take a different type of drug that your insurance company feels is more suitable than your doctor?
The opposite, in fact. What it does is, if your doctor, so you in sort of concert with your physician or your prescriber, believe that there is a medication that is more suitable for the treatment of your condition, this allows you, in concert with your physician, to override the requirement of the health insurance company, provided that you meet any of the outlined circumstances in the bill, which we believe are clinically justified circumstances under which you should not be taking a medication required by your insurance company. And I would like to add that we have worked with some of the insurers here in Kentucky and have come to this sort of language is I think an amenable compromise between the parties, and we definitely thank them for that as well.
Okay, thank you. I just want to clarify.
Mr. Chairman, also on that, I just want to make also a clarification. The bill is not a mandate by any means, nor does it do anything to make any changes to our Kentucky generic subscription list or laws, and nothing in the bill mandates that our health plans cover a penny more than it would without this legislation. So thank you.
Thank you.
Very good. Any other questions, comments from committee members? Representative Pollock, you don't have any questions for the good senator out there today?
I do. Thank you, Mr.
Okay,
Chair. Senator, you've had Coach Cal here on campus. You've had Coach Walls here yesterday, and we've got the winningest coach in NAIA history in our district, and I was hoping that she would be here today. Why is your mom not here?
All you get is her son. I'm sorry.
Thank you.
All right, seeing no further questions, Madam Clerk, if you would please call the roll.
Representative Bentley?
Yes.
Representative Fisher?
Yes.
Representative Flannery?
Yes.
Thank you. Representative Fraser Gordon? Yes. Representative Gooch? Yes. Representative Hatton?
Yes.
Representative Kirk McCormick?
Yes.
Representative Koenig? Representative Cole Carney?
Yes.
Thank you. Representative Lewis?
Yes.
Representative Lockett?
Yes.
Representative McPherson?
Yes.
Representative Meredith? Representative Pollock?
Yes, ma'am.
Representative Roberts?
Yes.
Representative Santoro?
Yes.
Representative Smith? Representative Stevenson? Representative Upchurch?
Yes.
Representative Westrom? Chairman Rowland?
Yes, and House Senate Bill 140 does pass. Should have a decent chance on the House floor. We'll see. But thank you for being here, Senator Wise.
Thank you, Mr. Chairman. Thank you, members.
I will entertain a motion to adjourn.